We were fortunate enough for the Travel Trust to get into all these except Tesla. So now what do? We're telling members of the CNBC Investing Club that we don't want to overstay our welcome. I think we've experienced one of the greatest runs in history, and those tend not to happen twice in a row, just once. That's why we're choosing to lighten up where we can for the trust, especially in tech, because we don't want to give back any of these big gains. I don't like to do these things in a vacuum. I want to rely on history so that I'm not off base in my own analysis. You know what I do when I have to do that? I turn to my friend Larry Williams. He's the best market historian I know, who's been the dean of technical analysis since I was a teenager. Great recent track record, too. Williams has done some amazing work showing that while we're still in a bull market, and that's definite, we're still in a bull market, his cycle work suggests that we're going to be in a bit of a tougher run here. To quote him, and you can see where we are, stock prices bob and weave like a prize fighter. While I expect the breakout that killed the bears last week to continue a bit, and that's that spike up, more traders should be prepared for a pullback to begin. And that means right here is when you're going to start seeing a decline. Now, look at his cycle work. It suggests we're headed for weakness in the middle of June. That makes sense to me. I believe the Fed will choose not to raise rates when it meets next week. But you know what that's going to do? It's going to put an immense amount of pressure on every single data point once we're past the meeting. And I think every stronger number will cause a decline. Then the bears, many of them uber-rich hedge fund managers who missed this move entirely, as well as an endlessly bearish analyst with a lot of followers, will come on air and bloviate about how you won't make any money in stocks. Never mind that we're already up 20% from the bottom right now. Rather than wait for the cyclical weakness coming up, I lighten up ahead of time, which is what we're doing right here for the trust, okay? And I made that very clear both in our morning meeting and in our home stretch broadcast. If you remember the club, you'd catch these, and I think you'd really enjoy them. Now, I know, as my friend and colleague David Kostin from Goldman Sachs put this weekend in his invaluable Kickstart document, we have, and I'm going to quote, narrow breadth, mega cap, and AI-driven tech rally, end quote. That, he says, has, quote, lifted the S&P 500 by 12% to a year-to-date to a high of 4282, end quote. Last Thursday, a new phase began, a broadening out of the breadth to include some cyclicals and even some financials. There are plenty of people out there who think that this is what we've been waiting for, that this is good news. These people are blind to the fact that we just had what we were waiting for, replete with the crowning of a brand new mega cap, NVIDIA. We don't want to overstay our welcome as the market broadens. We want to take some profits and set up for the next wave of the cycle, which is down but not out. If you sell some here, you can leg in this area. And that's what I want to do.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.